thank everyone for joining us, and I'm going to turn it over to Eric Berman.
Thank you, Nanette. Good day, everyone, and thank you for joining. My name is Eric Berman, and I'm a partner with Eide Bailly. Today, I'm talking to you from Georgetown, Washington, D.C. We made it just in time. The tropical storm made it through just in time for the webcast. It's now sunny and bright outside. I hope all are safe and healthy wherever you are in the nation. For our friends north and east of here, it's a lot of water and wind coming your way. We had about 8 inches of rain overnight. Parts of the area have downed trees and flooding, but we didn't lose power, and as you can tell, we didn't lose internet. So welcome to today's program, and I'm glad you're with us today. So again, my name is Eric. Many of us made it through another month of working remotely. While you've been remote, the GASB has issued 3 due process documents that are still outstanding that may impact your career in the future. Of the 3, the most benign change changes have to do with the proposed change to the GASB concept statements that is related to what we're going to talk about today when we get to the portion of this session on the governmental fund proposed changes. The most major changes may be part of the GASB's project on revenue and expense recognition. The GASB issued their preliminary views on that subject around the same time as our topic today, late in June. Although it took a while for not only today's exposure draft, but also the revenue and expense recognition preliminary views to be issued through publication. You know, there's a bit to go on revenue and expense recognition. We are planning additional webinars for the winter and spring of next year, and assuredly we'll talk about that one. It's really beyond the scope of today, but you'll hear some concepts on revenue and expense recognition within the financial reporting model improvements exposure draft language that I'm going to use today. So let's get to the agenda. Today's webinar will walk through the elements of the exposure draft, including all the proposed changes, even some illustrations from the exposure draft within the document, and even some potential journal entries. I'll also talk to you about the proposed transition and implementation provisions, which, to lay your fears to rest, no, this is not going to be implemented next June. We have some time left for you to prepare for this inevitability. You may want to comment on the document, and for your decision makers, there's even some user forms that have been set up by the GASB. Finally, there is an alternative view. No, this was not unanimously approved by the board. The alternative view may be thought-provoking for some, for sure. In any case, let's get to the business at hand today. The GASB's exposure draft on financial reporting improvements. Okay, you asked for it, and now it's here. The GASB released the exposure draft to the financial reporting improvements project. They approved it in late June, but it really didn't get fully issued until late last week because it took a while to get through publication, and I'll talk to you why, in a little bit on that. I've been working on this project since inception, and indeed it's been a long and winding road. Many of us on the task force started off with a hope, at least for the first year or two, that the GASB would look at things with a clean sheet of paper. After all, the bulk of the current model is nearly 2 decades old. The project that became the current model, which I also worked on, and we're talking back in the 1990s, which is the dark ages. It was even before the dark ages, because the dark ages I consider pretty much before COVID. We're talking the Stone Age. That project, which became our current reporting model, was started before Excel was even invented. And you can't imagine that world. We were using Lotus 1, 2, 3, and we were using WordPerfect, this great little program that I don't even know exists anymore. Both programs were awesome for their day, and both of those programs came to us on these things called floppy disks that held about as much data as your average tweet these days. Many of us said, you know something, on the task force said, you know something, GASB, let's come into the internet age. Let's try to think differently. That was the mantra for many of us. Well, applying that mantra ran into some serious headwinds from the preparer community. The bottom line for what we're going to talk about today and what's in the exposure draft, it could have been worse. There are 4 areas proposed of somewhat major changes and 3 areas of other changes, which in many cases are proposed, could be construed as not so much of a change beyond text. It really is kind of innocuous. To give you a sense of some of the exposure draft largesse, though, the summary, the proposed standard section, background and basis for conclusions, and alternative view, again, yes, there is a dissent. Journal entries, showing the proposed basis of accounting for governmental funds, that's 68 pages. The scope of changes section, all the impacted existing GASB statements, technical bulletins, implementation guide questions, and so on, that takes up 4 pages, a lot of which is a lot of semicolons and references and so on. The illustrative management's discussion and analysis and financial statements under the proposed model, that's 41 pages, which, by the way, is based on a real city. And I think one of our senior managers, who may be on the call today or on the webinar today, she might be listening. She had a heavy hand in drafting those, and I congratulate her on the issuance of the exposure draft. And she's working at the GASB for the next 2 years on this project. The codification instructions, that took a long time. That's about 150 to 160 pages. Many of those pages are implementation guide questions and answers that are proposed to potentially change. Now, if you add all that stuff up, that's over 270 pages to go through. You know, but the long and short is this could have been a lot worse. I mean, but, you know, in terms of the scope and how far this is going to go, are any governments proposed to be exempted? Only if your government solely presents non-GAAP financials. All other entities that present GAAP financials will be required to implement this if and once it's approved. So just, you know, realize that this thing is going to be coming, but it could have been a lot different. So let's delve into the first section here. The initial section is on the management's discussion and analysis. Yes, the GASB knows that many auditors prepare the management's discussion and analysis, but preparers should know that the users of the financial statements continue to believe that the MD&A is the most important section of your financials. Yet it nearly always is the last thing to get done, except for a very few number of governments that actually rewrite the MD&A annually or even every few years. It really is a good practice for you to do that even under normal circumstances. We have some of those that once the annual financial report is done 1 year, they give it a rest for a few weeks and then roll things forward and review the MD&A with a clear set of eyes. It again is really a good practice to do that. The goal of the proposed changes to the MD&A is a reemphasis of what already is in GASB 34, an objective and easily readable analysis of your government's financial activities based on currently known facts, decisions, or conditions, and to present comparisons between the current year and prior year with a focus on the current year so that your users can have an understanding on this magic question, why? Why did the balances change? Why did the results occur as they did? That is going to be re-emphasized within the exposure draft. The GASB, though, is going to be adding a section requiring writing in a manner that can be easily understood by readers who may not have a detailed knowledge of governmental accounting and financial reporting. Now, you're probably saying to yourself, gee, most of my elected body doesn't have a detailed knowledge of governmental accounting and financial reporting, and they really don't, they really don't read what I write for them. Well, the GASB is proposing to essentially make the language a little bit easier for them to understand, and maybe that will give them the impetus to read it more clearly, or maybe ask you questions more readily about what is in the MD&A. So it's, to me, my own personal opinion, it's actually a good change. The MD&A also should include explanations and interpretations that should help those users understand the information that is provided. But as I like to say, Houston, we have a problem here. This concept of readability has been around since the beginning of the GASB. It's actually in the initial GASB concept statement number 1 that was issued before many of you were born in 1984, and yet we really haven't, focused on it. And it also was replicated in GASB 34 that was issued in 1999. And again, we didn't focus on it. But this is going to continue in the exposure draft. And again, I think this is a really good change. The GASB also believes that there is a shared responsibility. Yes, the messages contained in the financial reports are intended for your users, but to effectively interpret these messages, the GASB believes that the user is responsible for obtaining a reasonable understanding of how government works and how public finance activities work, and of the fundamentals of governmental financial reporting, like studying the messages with a reasonable amount of due diligence, and for applying relevant analytical skills. Now, that phrasing has been around since concept statement number 3, which was issued around the time of GASB 34, again, about 20 years ago. So again, there's been this shared responsibility for a long period of time. Although the GASB believes that the reasonable understanding piece threshold of a user should be applied to the information contained in the basic financial statements, the board also believes that the objective of the MD&A is to communicate to a broad range of users. Long and short, maybe at some point, if you want to start with a clean sheet of paper for an MD&A, which I've been encouraging folks for at least 20 years to do, maybe have your nearest teacher read it. When I implemented GASB 34 many years ago, that's just what I did. Actually, I'll give you a little secret. I had my mom read it. She was a retired English teacher by that time and a librarian, and it really opened my eyes. And so it's really a good idea to do that. So let's go a little bit further in the MD&A proposal. The 5 major sections of the MD&A are still the same, and the information in those sections is proposed to be limited to those topics on the screen. An introduction, a financial summary, both of which are brief, and also they're going to be emphasizing the condensing of financial information, not a copy. And we'll get to that in a little bit. A detailed analyses, some of which may change, and again, we'll get to that in a little bit. Significant capital asset and long-term debt activity, and that word significant is italicized for a purpose, and that would include intangibles, leases, internally generated software, and so on. We'll get to some of that in a little bit. It also is going to include debt issued related to those leases. The next piece would be currently known facts, decisions, and conditions. And again, we'll explain some of that in a bit, but that language has been around since GASB 34. GASB is also reemphasizing that the analysis provided by the MD&A should avoid unnecessary duplication. And what that means is don't repeat the explanations that may be relevant to multiple sections, including things like the notes. And to avoid boilerplate discussions that, we don't want to introduce jargon and things like that, although some of us are a little bit more successful than others. And in some cases, the exposure draft may reintroduce jargon in and of itself. And that the boilerplate discussions should be avoided with only the most relevant information, again, focusing on the primary government rather than the discretely presented component units. Of course, the GASB also knows that many of us have copied the illustrative MD&A from GASB 34 and the implementation guide and adjusted things annually. That's probably going to continue, I bet, as the illustrative MD&A in the exposure draft is really wonderful and very easy to read. Finally, the GASB is also continuing the requirement that information included in the MD&A, again, distinguishes between that of the primary government and its discretely presented component units. Again, the sections of the MD&A are still the same. The introduction, but let's make it brief. The financial summary, again, make it brief. The information is supposed to be condensed, but not a copy of it, meaning I know that you like to link things up within Excel and Microsoft Word, or maybe you use a piece of software like Workiva that does it for you automatically. You're supposed to condense that financial summary to just the basic elements that we'll talk about in a little bit. Again, there'll be a detailed analysis, but this will change, and just wait for it. Significant capital asset and long-term debt activity. And again, I'm emphasizing this because a lot of us miss some of these elements. Now, before we get to the currently known facts and conditions changes, again, I emphasize the word significant. Given the GASB standards that I've talked about recently, leases, public-private partnerships, maybe you've been to some of my webinars over the past few months. We've talked about some of the upcoming GAAP standards. Those may land up in the significant capital asset and long-term debt activity, but that word significant is not defined in GAAP. It generally means worthy of attention. Is that more than material? Perhaps. It really depends on the situation. Remember, information is said to be material if somebody is going to make a decision on that, and omitting it or misstating it could influence that decision that users make as a result of the government issuing the financial statements. So let's take a look at the first illustration. Now, notice how it's different than the one you may have previously copied from the implementation guide for GASB 34 way back when. Even though the GASB wants to eliminate boilerplate, my guess is if the exposure draft is approved as is, this is really easy to understand. It's really slick how this was done. And again, I congratulate the GASB staff and our senior manager for working on this. Notice on the right, the spectrum of details about activities from less to more, and we're talking about this vertical arrow here, this less to more. See that arrow there? That's actually kind of neat to explain to your governing board as to what really is in the financial statements and how they're aggregated. The basic financial statements are summaries, of course, and note disclosure and RSI are more detailed, as of course they should be. Now let's take a look at the next one. This is the next illustration in the MD&A. It summarizes the different types of basic financial statements. the funds and the elements within the financial statements. This again could very well result in boilerplate, but I also think it's among the clearest discussions yet on what is in the basic financial statements and how they work together. And if you notice on the right, the definitions on the right of governmental funds, notice it uses the phraseology short-term financial resources, and we'll get to that in a little bit. But again, this is just an illustration within the MD&A. The first table in the MD&A, I promised to show you what condensed means. The first table in the MD&A remains the highly summarized statement of net position. Again, this is not too tough to take if you've been doing this all along since the implementation of GASB 34 almost 20 years ago. No real change from current GAAP. There is an emphasis on the exposure draft to, again, summarize the items within this table. All too often, again, governments just copy the entire statement of net position in the basic financial statements into the MD&A. Well, that makes things easier to review or audit. It's not what's required currently, and it's not what is proposed in the exposure draft. So just summarize things. Here, if you look on the left-hand side, it says current and other assets, capital assets, deferred outflows or resources, long-term and other liabilities, deferred inflows, and the various elements of net position. That's it. Now, for comparative financial statements, once this new standard is implemented, and I am emphasizing once implemented, the 3-year presentation would likely be included, but again, only for truly comparative financial statements. And we'll get to that a little bit later in the webinar. So let's take a look at the statement of activities. Again, this is it. This would be in the MD&A. No change from current GAAP. Program and general revenues and expenses by function. We'll get to an item at the bottom of the page soon. And if you look at the exposure draft on the left-hand side, it says unusual infrequent item, flood damage cleanup. And that's something of unusual or infrequent items. We'll talk to you about it in a little bit, so stay tuned. The analysis areas in the exposure draft are almost the same. The word almost is the operative word. But in reading the example MD&A that's in the exposure draft, and again, it's illustrative, it's not pure GAAP, it's not authoritative, you get a sense that it's less hefty than perhaps your current version of the MD&A. I know the underlying city used for the example MD&A, and it's a large government in the central United States. A 28-paragraph MD&A is likely shorter than many comparable governments. If this does get approved, you could see a savings in space in the MD&A. Of course, your facts and circumstances may differ, but other areas will increase, as we'll talk about soon. I left that last piece out, and that might be one that you're might be most enamored with, or maybe not. The currently known facts, decisions, and conditions that are expected to have that word significant differences from the current period. Notice the wording there. The current period refers to the reporting period, the one that is just passed. So for those of you who are June 30 governments, we're talking about the previous June 30. But this is forward-looking, but using currently known information that is truly significant. Examples of the type of information that would be in this area would include things like trends in relevant economic and demographic data, such as changes in population that you know of, total or even specific age groups, changes in customer base, income levels, building permits, enrollment, unemployment rates. You know, if you think about your government these days, you should know what's going on. Just take a walk down your main street, or, you know, your local newspaper or other media will tell you what is going on in your government with regard to changes in population or unemployment rates and so on. Information about the budget that is going to occur in the subsequent year, meaning the one that was hopefully just passed, such as changes from the current year and the total amount available for appropriation, such as taxes or fees, for example, or changes in tax rates or fee amounts, or changes in the economic base or range of activities, changes from the current year in planned spending, for example, such as inflation or labor contracts, new laws, regulations, or one that might be occurring these days, the elimination or reduction of programs that are being offered by your government, or maybe even addition or expansion. Any expected changes in net position or fund balance, that could also go in this subsection that is there. Additional information could be there, including information about the actions that the government has taken after the end of your reporting period, perhaps one that's being contemplated about pensions, OPEB, capital asset, improvement plans, long-term debt, lease agreements, public-private or public-public partnerships, and subscription-based information technology arrangements. Information about related to actions that other parties have taken that may impact your government, such as new legislation or regulations imposed on the government. For example, CARES Act reporting. That might go in there because there was something that was issued by the U.S. Treasury this past Friday afternoon for additional reporting for coronavirus relief funds. And so that might be a currently known fact. And that phrase, currently known, is emphasized. And we'll talk about that in a little bit. Now, this is not all inclusive as factors differ. And one thing that could be there is going concern as an example, and hopefully you're not in a going concern situation, but you may be. So let's talk a little bit about this phrase, currently known. The items within this section would be what has occurred prior to the issuance of the financial statements and not speculative. Don't guess. We're not in the business of predicting the weather. And any predictions or frankly political items is best served in the introductory letter and not in the MD&A, just like today. So think about that as we go forward into this financial reporting season. So use some of those elements, or perhaps others, to form that last section of the MD&A under current GAAP, which many of you may actually miss. So, okay, what's not in the MD&A? I mentioned a few minutes ago that there'll be a major change in the detailed analysis piece of the MD&A. Well, here goes, and I'm assuming most of you are sitting down. The GASB is proposing that the analysis that seems to take up the bulk of most MD&As I look at is no longer going to be in the MD&A. That's the budgetary analysis. Now, don't delete it now. This is still just proposed. It's not final. Don't delete it. But if it does pass as proposed, to implement, what I would suggest you to do is to copy it from your current MD&A and just place it as a placeholder where we're going to put it. We're going to move it to the required supplementary information. And so we're not going to totally delete it. We're just going to move it. And the proposal for the MD&A is not going to include the budgetary analysis. That's going to be a big change for a lot of governments if it's approved. A smaller change is proposed similarly. For those governments out there who do the modified approach to infrastructure, and you know who you are, discussion in the capital assets section would not include information on the modified approach to infrastructure. Now, if your government uses the modified approach, no, it's not being eliminated. The information in the MD&A for that infrastructure is only what is moving. However, the GASB has started pre-agenda research on whether capital asset accounting and financial reporting, including aspects like deferred maintenance, needs to be modernized. The modified approach could also be involved with that, but we're talking years and years down the road. We're not talking tomorrow. So don't eliminate the modified approach unless your government decides to do that. You could always decide to go back and depreciate your infrastructure, but obviously that's a change in accounting principle that you need to do, and you need to disclose it and start depreciating on a go-forward basis. That said, this is a pretty hefty change, moving the budgetary information to the RSI. Now, the elements in the MD&A, those are still the bare minimums. When I started talking about the MD&A over 20 years ago, when governments were implementing GASB 34, I said it's exactly like figure skating. And back then, figure skating, you had bare minimums to do. Those were called your compulsories. And my daughter was a figure skater. And those were the compulsories. Well, if this is the same thing, the bare minimums. And so just keep that in mind as you're working through the process of your MD&A. That leads us to our next two polling questions. So this one, actually, think about it. How long do you currently spend on your MD&A?
And about half people don't prepare the MD&A, but I think the next highest majority is a few days or a few hours.
Okay, a few days or a few hours, pretty good. Well, in my mind, the few hours may change, especially, should the exposure draft change how you do things. I mean, that's going to take a little bit to implement this new thing. But a few hours, it really depends, obviously, on the complexity of your government. Certainly a few days, I think, is more the norm. When I was a preparer, as a deputy state controller, and certainly now when I'm engaged to be a preparer, it's usually a few days, depending on the type of government. So let's go to the next question here. And this is your opinion. I believe the GASB's proposed changes are, what do you think? And I want to see how many people are ecstatic over the changes. It'll make my life easier. In my mind, I'm kind of, I'm okay with it. And obviously I want to see, the final. That's sort of in the middle, but I'm kind of okay.
So we're at about 88%, Eric, and so far the winning votes are, I kind of like the changes, but I want to see it before I say yes.
Okay. Excellent. I'm glad not too many of you said, what's an MD&A? Did you say NDNA? NDA, I have one of those. I'm glad not too many of you said item number E. So that leads us beyond the MD&A. The next piece is on unusual or infrequent items. There's been a bunch of information released about unusual and infrequent items within the GASB's technical bulletin on COVID-19 and on extraordinary items and so on. And one of the questions was on whether COVID costs were extraordinary or special items. And by the way, the GASB does not believe that COVID costs are extraordinary and or special items. They're not. And because, look, the GASB believes that influenza happens every year. Certainly the economic decline, that does happen occasionally, of course, but unusual or infrequent kind of doesn't meet the match here. So what the GASB is proposing is to align to the definitions that are already in place in GAAP, and they come from GASB 62. There are about 5 paragraphs within there, and you can see the definitions that are on the screen here. Unusual in nature, and we're talking something with a high degree of abnormality that is related to something that is ordinary or typical activities. And again, I'm paraphrasing it, so not to read what's on the screen. The infrequency of occurrence is not expected to reoccur in the foreseeable future, taking into account your operating environment. So the GASB is proposing not to change the items per se, not to change the definition, but to combine them in the reporting and not change the underlying language. The presentation would be combined on the face of the financial statements, and then the note disclosure would delineate or disaggregate the aggregated amount. Now, the same presentation would occur in the funds as they may have the generation of the unusual or infrequent item. Again, the definitions are not proposed to change, only the presentation of the items. So here, let's get control. Here is what the what the note may look like. You probably said to me, okay, gee, that sounds great, Eric. Where do I get further information on extraordinary items or special items? The GASB is proposing to utilize existing GAAP that was issued right after GASB 34. And GAAP requires information, and that came actually in GASB statements 37 or 38. GAAP requires information that is already highly summarized in the basic financial statements to be disaggregated in the notes. And here's an example of what would be in the notes about the city's flood. Could you have a separate paragraph if your government has both what is currently an extraordinary item and what is currently a special item? Sure, I would probably just have maybe a separate subheading, but we're getting a little ahead of ourselves. I mean, when we do a session maybe 2 or 3 years from now, reminding you of the changes or going through some of the final changes within the final standard and talking about implementation maybe a year or 2 or 3 from now, maybe we'll get to what we think the note disclosure may look like. The next piece is probably what's going to cause you the most angst. But when governments scrape away that angst, they may realize, gee, this is not too tough to take. The financial statements for the governmental funds are proposed to change, and we'll get to that in a few minutes. But for now, let's talk about building those financial statements of governmental funds. The most important aspect is presentation in accordance with the short-term financial resources measurement focus and accrual basis of accounting. What? Wait a second. What am I saying here? You mean my governmental funds may change from the modified accrual basis of accounting that's been there since the dinosaurs walked the earth? Could be. So let's break it down a little bit. Okay. The financial statements for governmental funds is proposed to be presented applying the short-term financial resources measurement focus and accrual basis of accounting. Now, as we learned in Accounting 201, not 101, measurement focus refers to what items should be reported in the elements of the basic financial statements, and basis of accounting refers to when those items are recognized in the financial statements. Now, the short-term financial resources measurement focus, and notice I'm emphasizing the word financial measurement focus, incorporates outflows of short-term financial resources and inflows of short-term financial resources, and all short-term financial assets deferred outflows of resources, liabilities, deferred inflows of resources, and fund balance. Now, notice I mentioned the word financial a bunch of times. We're going to be focusing on cash and investment-driven transactions. But we're also aligning to the accrual basis of accounting. The GASB is proposing under an accrual basis of accounting that elements of financial statements arising from short-term transactions and other events are recognized as they occur. Now, you say, wait a second, what about all the other stuff that's in things like other financing sources and other financing uses? Elements of financial statements arising from long-term transactions or other events are recognized when payments are due. Now, there's a big difference there. For the purpose of recognition of financial statements, and we're going to apply the short-term financial resources measurement focus and basis of accounting, events that are recognized in the financial statements would include the transactions, which are external events between a government and another party that have financial consequences, meaning cash in and cash out, in other events such as allocations of inflows of resources to individual funds, and external events such as changes in fair value. So it's really kind of close to cash in and cash out. And remember, financial assets in the measurement focus include, again, cash, assets that are available to be converted to cash, and assets that are consumable in lieu of cash. And all liabilities in this measurement focus are financial liabilities. So wait a second. Sounds kind of close again to cash in and cash out. Now we'll get to short-term versus long-term in a little bit. But because of this change in measurement focus and basis of accounting, the GASB is also proposing to change special revenue funds to special resources funds. Now, I know this is kind of moving your cheese because you've known this as special revenue funds since prior to the GASB, prior to 1984, and probably since the 1930s. They've always been special revenue funds. So why is the board proposing this change? They wanted to recognize not only the inflows, because that's special revenue funds, they want to recognize the outflows from the funds. But in reality, it's just a title change. Everybody, let's just take a deep breath on that one. It was a late change, and you know something, I can get over that change. That's okay. Okay, so what goes into the governmental fund financial statements? That will be the balances of the short-term financial resources and the flows relating to long-term financial resources, but separated from short-term financial resources. Now, what the heck does that mean? Whether a transaction or other event is short-term or long-term is determined by the period that elapses between the inception of the transaction or other event and the conclusion of the transaction or other event. Aha! Now it's starting to make sense. Short-term transactions and other events are those for which the period of inception to conclusion is 1 year or less. Long-term transactions and other events are those for which the period from inception to conclusion is more than 1 year. Hey, this is getting a little easier. If payments are made or received prior to the due date, elements from long-term transactions and other events such as debt service principal and interest are recognized when the payments are made or received. That's not too tough to take. But what are we missing? We're missing the concept of normally. That's been in place since GASB 34. It came out in Interpretation 6, Interpretation 6 came out within a few weeks of GASB 34. But it was not uniformly adopted. You can thank your governments in places like Illinois for causing this change by not paying their bills on a timely basis. Yeah, if you hold a bill for 3 years and that is normally to you, guess what? Your accrual period should be 3 years long. But most of us, we adhere to this thing called the 60-day accrual. And that could cause a change for financial reporting purpose of the governmental funds, but not for budgetary purposes. Again, the GASB has nothing to do with budget. Whatever happens in your budget stays in your budget. This is just for governmental fund reporting, and we'll get to the analysis between the two in a little bit. So what does this mean for your governmental fund financial statements? Let's look first at what the assets and liabilities might be, and they're over on the left-hand side. Not much of a change, it seems. Cash, investments, receivables, due to from other funds, and the big catch-all other. And then accounts payable, advances, mainly relating to those grants where there could be disallowed costs, some which these days could be COVID related. Due to and then long-term debt issued for short-term purposes. When will accounts receivable or accounts payable be recognized? Well, the GASB is moving toward the FASB here. The auditors who are in the session today, who work with their for-profit and not-for-profit clients, are getting used to the term binding arrangement over and over. Those auditors had to understand the elements of FASB Topic 606, which for them was pure joy. And by the way, for the preparers out there, many of the aspects of Topic 606 are in the GASB's Revenue and Expense Recognition Project preliminary views. Again, those are just the preliminary views. They are not final. They're not in an exposure draft form, but the GASB is starting to have you think about them. Now, part of those aspects are binding arrangements. What is a binding arrangement? A binding arrangement is an understanding between two or more parties that creates rights, obligations, or both among the parties to a transaction. A binding arrangement can be written or oral or implied by your government's existing practices. And that could include things like legislation, contracts, grants, and so on. The binding arrangement may produce more than one transaction for the purpose of determining whether something is short-term or long-term. When none of the parties have completed any of their required actions, a transaction does not occur. A transaction first occurs when a party completes some required action. So let's put this into English. Eide Bailly provides your government an engagement letter. The engagement letter indicates that Eide Bailly will audit your government in accordance with the contract in exchange for a payment. That is a binding arrangement. If both sides fulfill the terms and conditions in the contract, a payable would be declared. Now, there may be milestones in the engagement letter, or there may not be. The milestones could be such as interim work, field work, single audit, and so on to spread out the budget. And this is no different. You could have multiple stages within that binding arrangement, or you may just have one. Delivery of the audited financial report, the auditor's report, and the financial statements. That's just one delivery. And in which case, there's only one milestone in there. And that would indicate what is within the binding arrangement. Again, you'll see this again if you attend a session on the GASB's Revenue and Expense Preliminary Views. It's the exact same language, and that is within the Financial Reporting Model Improvements Exposure Draft. Again, the PV is beyond today as we don't have time during the winter and spring. It's up to about 80 some odd degrees here in Washington, D.C. We have a while to go to in the winter, but during the winter and the spring, we may be giving webinars on that document as well, as I introduced earlier this hour. The inflows, taxation, charges, licenses, fines, fees, investment earnings, transfers in, and then the outflows, the various functions of government, and transfers out. Hopefully your anxiety level has gone down a bit. It's why I said at the outset, could have been a lot worse. Now, let's take a look at the long-term or non-current activities. Well, guess what, folks? You've seen this before. Debt service, debt issuance, capital outlays, sale of capital assets, transfers. You're saying to yourself, wait a second, those are the other financing sources and uses, right? We're just changing the terminology and summarizing them. Well, guess what, Virginia? That's exactly what you're getting. Is basically a retitling. Now, granted, there will be some adjustments due to the change in, changing the measurement focus and basis of accounting. We're going from a modified accrual basis of accounting to a full accrual basis of accounting, but a short-term financial resources measurement focus. So hopefully your anxiety level has gone down a little bit. And with that, that brings us to our next polling question. The new measurement focus and basis of accounting. Let's see, what do you think? Will it make my job easier preparing the governmental fund financial statements? Or make my job more difficult, but I know where the GASB's headed? Or not really change things, or doesn't apply since I don't have governmental funds? Or I'm really not sure yet.
Make my job more difficult, but I know where the GASB is headed is what is winning.
Yeah, I think so. And I kind of agree that at least in the initial few years of implementing this, and we'll get to implementation in less than an hour, I think at least in the outset, if you have to change something in your systems, change something in your policies and procedures over financial reporting, but not your budget. Remember, I emphasize that this is not budget. At least in the initial years, it'll make things a little more difficult. But once all the dust is settled, assuming this passes as is, it really comes back down to cash in and cash out, which is, guess what? It's pretty darn close to what you're doing in your budget. So, I think once the dust settles, you'll be okay. So, since the measurement focus and basis of accounting is changing, the names of the statements are proposed to change. Some of the elements are proposed to change, but again, this could have been worse. For those of you who are GASB geeks out there, I am, you may have, or GASB groupies, as some of the board members calls us, who go to every GASB meeting. You may recall that the preliminary views document contained an introductory statement that looked like a disclaimer of an auditor's opinion or auditor's report. I don't know of any response letter to the GASB that liked that disclaimer, especially from auditors, as it told readers, don't look at these financial statements, don't look at our governmental funds. Well, guess what? They listened to us. Yes, the GASB listens to you, and they decided to take that statement out. And so what is left really is title changes. And look at the title changes. We're going from balance sheet to short-term financial resources balance sheet. No real change in the elements of assets and liabilities and fund balance. Short-term, the statement of revenues, expenditures, and changes in fund balance is going to convert to a statement of short-term financial resources flows, presentation in current and non-current format. And again, the title is before that hyphen there, but we're going to present it in a current and non-current format. You don't need that presentation in current and non-current format in the title. We're going to convert from revenues and expenditures to inflows of resources for current activities and outflows of resources for current activities, and then other financing sources and use as well. That's going to be net flows for non-current activities. And then we'll have that nice unusual or infrequent items, and then net change in fund balances. That is not going to change, although because of the change in the measurement focus and basis of accounting, that will probably change the beginning balances, assuming it's going to be implemented as is. So the reconciliation pages, what happens to them? Well, due to this change in measurement focus and basis of accounting, the reconciliations may be much shorter than currently presented. And in fact, depending on your government, may even fit on the same page as the balance sheet and the flows statement. And so it really depends on your government. But of course, they can be on a separate page if need be. So this is what the balance sheet is proposed. Not too many changes, except for the special resources fund and the reconciliation page. In the reconciliation page, I'll show you what it looks like in a little bit. But again, it could go on the bottom. And again, if this print is pretty small for you, if you're looking on it on an iPad or, or on your phone, Zoom, it tends to, it tends to really reduce things. And again, I apologize. This is really just a snap of what is in the exposure draft. And you can take a look at this in the GASB's exposure draft. It's freely available to you. Of course, the devil's in the details of the underlying transactions. But as a reminder, this is taken from a real city. Notice the categories on the left, no real change: assets, liabilities, and fund balances, and then the various delineations of fund balance. And then going across the top here, the various major funds. Notice the title: short-term financial resources balance sheet governmental funds. And again, this amount is expressed in thousands. So here is what the reconciliation between the governmental funds and the government-wide. And again, it can go on the bottom. It may just fit there for many governments, but for this presentation, I needed to put it on a separate slide because of Zoom. And the print is really, really small. And here it is. Notice what is in there. All of the items that are not short-term financial resources, capital outlay, long-term notes and other receivables, internal service fund assets and liabilities, long-term liabilities, bonds and other items, pensions and OPEB. Looks familiar with a few items missing, but otherwise, guess what, folks? Not too tough to take. Pretty simple to do your reconciliation. So let's look at the short-term of financial resources flows. Again, I apologize for the printing. This is Zoom. But again, inflows and outflows of current activities, the details, of course, of those. Net flows from current activities, net flows from non-current activities, details, the total net flows from non-current activities, unusual or infrequent items. Now, again, you can aggregate those or detail them. The net change in fund balances, and then the fund balances at the beginning and the end of the period. Again, I could show you the statement, but again, the print is very tiny. It's available online from the GASB. The reconciliation page is still there, again, at the bottom of the page or on a separate sheet. It's really up to you how it looks. So let's dig a little deeper and go through some of the journal entries. Again, there is an appendix with 13 example transactions to show what they would look like in the governmental funds. Now, I've taken the liberty of adding a comparison to current GAAP, and this came from the preliminary views, and I just did this for your edification. Looking at 11 of the 13 here, not many changes in the debits and credits except for the recognition period. Again, we must remember that we're talking 1 year instead of 60 or 90 days, which may be different from your budgetary practices, but your budgetary practices may already be different than your governmental fund financial reporting. You may budget on a cash basis and present on a modified accrual basis. And that's why we have the budgetary reconciliation schedule already for those prospective differences. Now, changes could be presented for taxation, comp abs, accrued interest, claims and judgments, and a few others. Just remember, one of the proposals within the invitation to comment and the preliminary views was a total financial resources measurement focus, which, folks, that may have resulted in pension and OPEB amounts in governmental funds. Now, granted, I happen to have liked some of the aspects of total financial resources, but you know, I really couldn't see how to implement it. So again, you know, here's a few of the changes. You know, obviously comp abs, the liability would only be recognized if the employee separates from service, you know, but unpaid. The outflow for amounts due and paid for the current year and amounts estimated within 1 year. Now, that is under current GAAP. Coming up this fall, or early next year, the GASB may propose some slight changes to comp abs. We'll find out when we get there, but the GASB currently has a project taking another look at comp abs because that gap has been around since prior to GASB 34 without any changes. That was GASB statement number 16 back in 1994, 95, 96, something like that. And so it's really, really old stuff. But, you know, if it ain't broke, don't fix it. That's my personal opinion. But who knows? Maybe there's something better out there. The accrued debt interest, there may be a liability for amounts accrued but unpaid at year end. The debt service outflows would relate to debt that occurred during the year, and so there could be, assuming the exposure draft goes through, there could be a liability for accrued interest that's there because we're talking the accrual basis of accounting, short-term financial resources measurement focus. Claims and judgments, that could very well change because, again, the periodicity. We're going from 60 or 90 days down out to 1 year. And if you have a structured settlement, you kind of know what those are. The notes receivable, if it's long-term, that wouldn't be presented. Might not be a receivable entry unless the amount is matured. And the matured amount would be an inflow of resources, just like the current way we do things. Tax anticipation notes, there could be a change here recognized. TANs would be short-term. There could be a payable recognized at the end of the year if it's matured but unpaid. The lease liabilities, there could be a change as well. Then any new activity in leases would be non-current. Outflows of lease payments would also be non-current activity, pretty much like other financing sources and uses today. So that's about it. And again, that's 11 of the 13 governmental fund journal entries. I betcha, assuming this exposure draft passes as is, there might be even more journal entries perhaps presented in some form of implementation guidance, just like we had with GASB 34 back in the day. Okay, that's the governmental funds. There is, of course, more. The GASB is also proposing changes for proprietary funds. Now, right now, GAAP allows governments to determine what is in non-operating, disclose it in the notes, and then align to it as a significant accounting policy. In the exposure draft, non-operating is proposed to be subsidies received and provided, revenues and expenses related to financing, resources from the disposal of capital assets and inventory, and investment income and expenses. Most revenue and expenses will then be operating. But for those entities that are financing entities out there, interest revenues and expenses would move to operating, and that's the same as in the current statement of cash flows reporting. Now, I mentioned the magic word subsidy. The word subsidy's never been defined in GAAP prior to the exposure draft. The GASB is proposing subsidies to be, as you can see on the screen, transit systems, airports, education, healthcare, and so on, especially during this time of COVID, would likely have huge flows as non-operating using this definition. Now, being on the subcommittee that drafted this language, getting to this right phraseology took months. But ultimately, it came from a university CFO and a few of us that came up with these words. If you are one of these entities, review this, perhaps gauge the impact, and see if it makes sense. In the cases that I've talked to, and the clients that I've talked to, not too tough to take so far. But again, a lot of entities like transit systems, like airports, education, healthcare, they may exist on subsidies, especially during this time of COVID. So how would the subsidies look in the statement of revenues, expenses, and changes in net position? Again, not too tough to take. I apologize for Zoom being kind of tiny. A new section on non-capital subsidies, including transfers in and out, and that's in the center of your screen. Now, other non-operating revenues and expenses, that's in your earnings on investment, your gains, interest expense, capital contributions, and transfers in. And so your capital grants and contributions would be below non-capital subsidies. So again, not too tough to take there. So that gets us to our polling question. And by the way, for those of you who love statements of cash flows, no changes there as well. And for those who loathe the direct method, folks, I tried to go back to the indirect method, but the board didn't take my advice. So no changes there as well. And so let's get to our polling question. What do you think of the word subsidy? You think that'll make a large change to your non-operating revenues and expenses, not make a large change to your non-operating revenues and expenses, or you don't have proprietary funds. And for those of you who didn't have governmental funds, and if you say you don't have proprietary funds, hopefully you have fiduciary funds.
So Eric, it looks like the majority are saying not make a large change to our non-operating revenues and expenses.
Good. Good. This is looking good. All right. So let me get back control. One thing I forgot to mention is that assuming this goes through, that disclosure we put in our summary of significant accounting policies on your own particular government's definition of what is non-operating and operating revenues, that goes away. You no longer need it because it's now going to be defined in GAAP. And so that'll save you a little bit, maybe a paragraph or two within your note disclosure. Of course, many of us, our note disclosure goes on for dozens of pages. And beyond the scope of today, yes, the GASB started a project taking a look at note disclosure, but first they have to get the conceptual framework of note disclosure. And there was a hearing about that last week. And so clearly, the GASB wants to make as much of a change as you do in the notes. So other changes are in the exposure drafts. Now, governments have always had the ability to present component unit information in a condensed form in the notes. Now, the GASB is proposing to present component units as separate columns in the statement of net position and activities if it is readable. If it is not readable, combining statements are going to be allowed. Now, our largest governments probably have over 50 component units. State of New York, for example, they used to, last time I looked, they used to have a component unit that their sole job was to aggregate other component units because they have so many. They have hundreds of component units. Now, of course, combining would be the best way to go here. The last time I prepared on behalf of a state as a deputy state controller, I had 61 component units. I used to call them my children, and because I was in charge of them all. And so indeed, we did a combining statement. Certainly, if you have more than a handful of component units, you may land up with a combining statement as well. And whether or not that is required supplementary information or supplementary information, that's going to be up to the details of any final standard. But I know that'll be a question some of us will have. Now, the budgetary comparison information we talked about almost an hour ago, that is proposed to move to the RSI. Still, we're presenting the general fund and each major special resources fund. I didn't say special revenue fund, special resources fund that has a legally adopted budget. Separate columns for the variances between original and final budget amounts and final budget amounts. So again, original versus final, and then variance, and then final budget versus final actual amounts in variance. So you're probably saying, Eric, what happened to the MD&A information? Well, just like pension and OPEB notes to RSI, the analyses of the significant variances between the original and final budget amounts and the final budget amounts and actual amounts is also proposed to be in the notes to the RSI. And pretty easy to move over. The analysis should include any currently known reasons for those variations that are expected to have a significant impact on your budgetary fund balance or to produce significant differences from the current period and budgetary results. And guess what, folks? It's the exact same language that is currently in GASB 34. All they're doing is moving it to RSI. So here's what it's going to look like. Here's your component unit presentation. Your component unit presentation, pretty easy peasy, not much different than today. I've copied the entire thing for the single column and the combining, but you get the drift of how it's supposed to be. You can see on the top schedule, the cash number is 60,133, and the combining is right here. It totals to 60,133. Not too tough to take. So let's take a look at the budgetary comparison information that'll go in the RSI. And again, remember, technically, the management's discussion and analysis is already RSI. Now this is going to be RSI. Not much changing other than geography. Remember, this is going to be audited in the same fashion as other RSI schedules, including the MD&A. Now, I know the auditors in the room are going to say, technically, the RSI is not audited, and that's true. But at least they do have some analysis that is provided on there, just to make sure that the numbers all tick and tie and they make sense. The schedules are not much different. And again, I apologize for the print size, but this is again Zoom, and this will be on GASB's website as well. Original budget is the first column of numbers. Final budget, variance with the final budget, actual amounts on a budgetary basis, and variance with the final budget. Not too tough to take. And then at the bottom of the screen here, there's a reconciliation to GAAP basis. So you can do this entire schedule on a budgetary basis. And this box in the top is also important. You do not have to do a current and non-current presentation. That will not be required. And this is just a summary page. Now let's take a look at the transportation fund, and this is just a single fund presentation because it has a legally adopted budget. Now, given the fund's operation, summarized. It's summarized flows here. All they have are taxes, intergovernmental charges, general government, and public works. Pretty easy to do, prepared on a budgetary basis, and then the reconciliation is just one line because the budget is GAAP, because they budget on a short-term financial resources measurement focus and basis of accounting. Now, if you budget on a cash basis, you're going to have a reconciliation item down below there. So what would the note look like? Not too tough to take. In this case, it's a simple reconciliation page. That's all it is. Budgetary inflows and outflows, unusual or infrequent items, your over and under for for the general fund as well as the major special resources fund. I have to keep reminding myself not to say special revenue fund, it's special resources fund. And notice the text that is used. Now, the information can be in the form of a table or it can be in paragraph form. It's up to you. The elements of the reconciling items, though, will differ from government to government, so don't just do a blanket copy of this. Again, obviously, wait until there is a final standard and you're going to implement it. Other proposed changes. The statistical section of CAFRs. Again, we're just talking comprehensive annual financial report. If you don't prepare a CAFR, don't worry. This particular aspect wouldn't apply to you unless the GASB decides to expand and has statistical information in basic financial as other information connected to basic financial statements. The exposure draft clarifies financial trends information. Again, it's pretty easy. Governments engaged only in business type activities or only in business type or fiduciary activities would present revenues by major source for their business type activities, distinguishing between those categories of operating and non-capital subsidy and other non-operating revenues and expenses, just like I showed you a few minutes ago in the statement of revenues, expenses, and changes in fund net position. For those of you who are fiduciary governments out there, fiduciary activities, I don't know of non-capital and non-operating revenues and expenses, but that's what's in the exposure draft. It's just a little typo that's there. And I'm sure there'll be folks who are going to be commenting on it just like I probably will. So, to the real gist of the hour. Okay. Now that you know that it's not a huge amount of changes, but significant enough, what does your transition look like? Okay, back when we implemented GASB 34, we had 3 phases. We had phase 1, here I'll give this to you in a second. We had phase 1, financial statements for periods beginning after June 15, 2001. Wow, that was like a long time ago. For governments with total revenues over 100 million or more in the first fiscal year beginning after June 15, 1999. So we measured in the period beginning after June 15, 2001 for total revenues of 100 million or more. And, we measured in the first fiscal year after June 15 of 1999. So my government started on July 1st of 2000, and we measured to June 30 of 2000 actually, no, July 1st of 1999. This is so long ago, I forgot what year it was. July 1st of 1999. And we went to June 30 of 2000. And guess what? We implemented in the period beginning after, it was July 1st of 2001 when we implemented GASB 34. It was before 9/11. It was in the dark ages. And no, guess what? GASB did not give us an extension, even though it was 9/11. They didn't. The phase 2 governments got a year grace period. The phase 3 governments, which were 10 million or less, got an even further grace period of 2 years. And there was an additional grace period for infrastructure. So what is the GASB proposing now? The GASB is proposing to measure your total revenues in the first fiscal year beginning after June 15 of 22. That means July 1st for you June 30 governments out there. That means July 1st of 22 to June 30 of 23. Now, if your government is above 75 million, of revenues, implementation would be, again, for a June 30 government, July 1st of 24 to June 30 of 25. Less than 75 million, you got a year grace period. Now, the breakpoint of 75 million was a compromise, just as the breakpoints of 100 million and 10 million were a compromise in GASB 34. But there weren't too many governments that had revenues in between 75 million and 100 million, and the governments that were surveyed by GASB staff. A little known fact is GASB keeps copies of hundreds and hundreds and hundreds of CAFRs out there and basic financial statements. They have huge amounts of information in databases, and they could easily tell over the space of a few hours or a few days the amount of governments that are out there. And plus, they also look at the census of governments. So they know where these breakpoints are. And there was a really nice study done by GASB staff, the financial reporting model staff, showing where those breakpoints are. And guess what? Not too many governments fell by the wayside. Basically, the $75 million breakpoint indicates really small governments. You get an extra year. How do you calculate this? And how do you deal with this if you're thinking about the future? So first, given the changes in the exposure draft, not too tough to take. And this may give you a sense of a timeline. How do you calculate this? Well, it's the total inflows or additions except for extraordinary and special items. And for fiduciary activities, again, you use just the total additions. How do you implement this? Well, it's going to be retroactive application for all your periods presented. Now, I can remember back again in the dark ages when we first implemented GASB 34. We made a decision to go from comparable financial statements to single year financial statements. And to my knowledge, the government where I was a deputy state controller still only presents single year financial statements. You're not required to do comparable financial statements unless your law or regulation says you're required to do so. But if you are required to do so, you'd have a restatement going back 2 years. And you would need to do that in the MD&A as well. Now, there was a last-minute change that allowing governments not to restate prior periods for purposes of providing comparable data to MD&A. So you don't need to change the 2 years back MD&A. You certainly don't need to do a third year as it's currently written, But if you do fully comparable financial statements, and again, fully comparable financial statements are a complete 2-year set of financial statements and 2 years of notes and 2 years of RSI. And not many of us do that. But if you do that, then you'd have to go back. Governments are encouraged in the MD&A to provide a comparable analysis of key elements of those governmental activities, though, in business-type activities as reported in the government-wide financial statements in the MD&A for the prior period. So you might have to look back anyway as part of doing that comparison to really do your analysis of the MD&A. So, how do you respond to this? Responding to this will be lengthy. There is a companion concept statement, again, we're not talking about today, but it mirrors the short-term financial resources measurement focus of the exposure draft. Comments will be due in February on this one. Okay, so that's February 26th of 2021. Again, this is an extended time period for good reason. A lot of us are doing a lot of different things these days, not the least of which is COVID response. And since that has taken precedent, there are a handful of governments out there that have already said they're having issues producing their June 30 of 2020 and December 31st of 2019, and certainly the interim period in between December 31st of 2019 and June 30 of 2020. Those financial statements, a lot of them are delayed. And so the GASB said, let's give folks enough time to really understand this. But I have a cautionary tale out there. It's also the due date for the revenue and expense preliminary views. And again, that is beyond the scope of today's webinar. The GASB could have extended a little bit further, especially on the revenue and expense recognition PV, but we are where we are. We do have 9 months effectively from the original date of approval of the GASB to when this thing, or actually 8 months, excuse me, my math is off today for some reason. We have 8 months until things will be commented upon. And something, the GASB also takes comments after the due date. They don't give you an F. They do take that into account. If there's something really important that you think should be commented on, please continue to comment to the GASB on it. So there will be public hearings in this one. They will begin in March and stretch on into April at sites around the country. March 23rd, 2021, for those of you who are in Boise, Idaho, where my office is, Boise and the state of Idaho are going to be hosting the National Association of State Controllers Conference there, and there will be a public hearing on March 23rd, 2021, beginning at 8:30 Mountain Time. The next week, the GASB is going to move to Atlanta, and that's March 30th and 31st, and the hearings will begin again at 8:30 Eastern Time there. On April 8th, which is my wedding anniversary, they will move to New York, New York. Usually that happens in Queens across from LaGuardia Airport. For those of you who want to see a very nice new terminal, go to LaGuardia Airport, April 8th. There's usually a hotel right across the parkway from there where the GASB holds hearings. The next week, April 13th and 14th of 21, the hearings will move to Chicago, Illinois. Usually it's by O'Hare International Airport, again beginning at 8:30 local time. And then the following week after that, the hearings will be in San Francisco, California, again, usually across from the airport. And during that time, it would be at 8:30 Pacific. Now, there will be user forums. They have been tentatively scheduled April 9th in New York, beginning again at 8:30 Eastern, and then April 15th in Chicago, 8:30 Central Time. Now, assuming we still are dealing with the COVID pandemic, the GASB will provide call-in numbers and video conferencing as much as the locations would allow. Again, the hearing dates and locations are tentative until the coast is clear on COVID, and let's all hope together that the coast is clear. Now, at those public hearings and user forums, there will be additional testimony on recognition and elements of the financial statements, which is the concept statement exposure draft. There will also be public hearings on revenue and expense recognition. So my friend who's the state auditor of Colorado, who's now a GASB board member, she already said she'll be busy, on those days. 3 public hearings at once during those days. They will have a busy time. The user forums, you may want to know what's in the user forums. Now, the user forums are conducted primarily for those individuals or organizations that have a financial statement user community perspective. So you're talking your rating agencies, your public interest research group, those charged with governance, and so on. If you happen to know organizations or individuals who may be interested in those forums, you may want to provide them the user forum information. Again, April 9th in New York, April 15th in Chicago in the morning. And again, the participation, if we don't have a pandemic, could be in person, or they will be by video conference. Now, the GASB does require notice in advance of your intent to participate. Of course, since they are public hearings, you can just listen in. Now, I don't know of too many people who listen into all 8 hours, but there are some of us out there, the GASB geeks and the GASB groupies, who actually do so. And so you may glean something that you may have forgotten about, and it is a real learning experience. So those are going to be the places where you can voice your opinions and actually see the GASB in action. Now, there is an alternative view. The preliminary views document a few years ago contained multiple alternative views. This exposure draft just contains one. A board member dissented for 3 primary reasons. This statement continues the movement of governmental fund accounting and reporting away from budgetary accounting and reporting. He believes, or she believes, that it is really jettisoning away from budgetary inflows and outflows. But, in defense of the rest of the board, and I'm not saying I'm pro alternative view or against alternative view, the GASB a number of years ago made a pretty clean break away from doing any form of budgetary conjecture and so on, or budgetary standard setting. That's really not under the purview of the GASB. But this does represent a significant change from current budgetary accounting and financial reporting. According to this board member who has an alternative view, it facilitates no significant operational decisions or evaluative judgments. And it's simply because it's pretty much cash inflow and cash outflow. And finally, it fails to address the most significant limitations of the current model. And the most significant one being that if you happen to, even under today's model, if you happen to have a debt payment 1 minute after the end of your fiscal period, it's not presented as a liability. Unless it's matured but unpaid. But it's not matured yet because that 1 minute hasn't occurred. So it's not presented as a liability, even though it's paid 1 minute after the end of the fiscal year. The importance of linking budget to governmental funds has been in place since before the GASB, and likely since modern governmental accounting began over 100 years ago. Budgets have been presented since then as an important control aspect, and the board member believes that the short-term financial resources measurement focus is such a compromise that the core objectives of governmental funds are not met. Budget compliance and aligning current revenues to current flows for services to this board member is a true north. Second, the board member believes that liabilities may be understated for notes that mature just one day after that reporting period. Finally, the board member believes that the proposed governmental model still has drawbacks because it obscures the government's true fiscal condition. As an alternative, the board member proposes primarily reporting governmental funds on a budgetary basis and layering on accruals to get to the current modified accrual basis, meaning no change from current practice, and then to government-wide. Now that's kind of interesting how it is, because I bet you that's exactly how you do your current accounting and financial reporting. You start off with your budgetary basis, you layer on your accruals to the governmental funds, and then you further layer on accruals to government-wide financial statements. Now, you may like that, you may not like that. It really depends on your point of view. But you may want to express your point of view if you happen to align to the alternative or not align to the alternative. Now, I've always summarized this board members' views. Now, if you believe you more align to that view, I encourage you to read it in detail and decide. If I can just take a second and pull up his views go on for, I just pulled up the exposure draft. His views go on for about, or her views, I apologize, go up for maybe another 2 or 3 pages here that are going on. And it's summarized 1, 2, 3, 4, 5, 6, 7, 8. Yeah, it's about 20, 25 paragraphs here. So you may want to take a look at that and see what it is. Now, and if you happen to like it, maybe comment on it. Now, knowing the timeline for the current reporting model, what about the other 2 of the big 3? Now, the note disclosure conceptual framework, which is only the beginning phase of the project, that'll be finalized by the middle of next year. The hearings occurred already. So far, only controversial in 2 or 3 places, not too tough to take, but that concept statement would not be authoritative to you. Just wait until the next phase. The next phase is taking a look at either future GAAP standards and setting up a framework, or existing GAAP standards and setting up a framework. We're not exactly sure which way the board will go. My guess is they'll take a look at some targeted measure of current GAAP standards and go through them to see if they align to the current framework as proposed. That is going to be in the next phase of the note disclosure project. Now, the financial reporting model project, we talked to you about implementation. Now, the comment period is until February. We got public hearings going on in February and March, and we have a final standard potentially going on. The final standard would be issued in mid-2022. What are we looking at in terms of implementation? Remember, if we go back a couple of slides here, let's go back a couple of slides. Let's take a look. We're looking at fiscal years beginning after June 15 of 24 for our largest governments, or 1 year later. So for those June 15 of 24, we're talking Q3 of 24, quarter 4 of 24 or quarter 3 or 4 of 25 that is there. Now, for those of you who are also tracking the revenue and expense project, that that's going to entail a little bit more. And that's why we have the preliminary views out there. And just to give you a sense of the largesse of the preliminary views, it may update GASB 33, which was issued right before GASB 34. Well, duh, Eric, it's the number before. That was issued back in 1999, but also it may update a lot of other standards that are out there. GASB statement number 62 could be, really heavily edited, if not eliminated in many circumstances. GASB 72 on fair value, who knows, that might change. Certainly the NCGAs on recognizing liabilities, GASB 34 might change, and so on. So there's a lot of gap standards that may change, but we're talking a very long period over the next couple years. If you take a look at that bottom there, public hearings on just the preliminary views are going to occur in quarter 2 and quarter 3 of next year. And then the exposure draft, the redeliberation process, that's going to take well over a year. And I bet that could be because of COVID-19. The board is going to take a little bit of time just to make sure, how things are. And then the exposure draft, as of now, likely the second quarter of 23, comment period might be only 90 days, and then public hearing later on in 2023, and then final standard in 2025. Whether or not that gets implemented back in 2025, 2026, or 2027, we really don't know. But at least now you have some form of plan. You can sleep at night. So that leads us to our final polling question. The GASB proposal may cause me to look at my data gathering and financial reporting process soon, or cause me to move from spreadsheets and text-based documents that have errors to something more in line with the future reporting model, or C, cause our government to take a look at our entire financial reporting process from processing and gathering data to reporting, or D, force my early retirement. Well, item number D is not for me, but I bet you there's going to be some folks who give me a call and say, hey, Eric, come take a look at my process and policies and procedures. What do you think out there?
So far, A is the one that is leading currently.
Yeah.
But there are quite a few that are selecting the early retirement.
Early retirement. Again, folks, we can start this one all over again. This could have been a lot worse. I'm holding up a blank sheet look at the imaginary blank sheet of paper. That's where we were 7 years ago when this process started. Blank sheet of paper. A lot of us on the task force held it up. That's where we wanted, including me. I said, hey, do away with governmental funds, just do entity-wide. And the board said, no, that would be too harsh. And we had those discussions back in 2013. It's now 2020, and now we're at an exposure draft. So if you're thinking about early retirement, well, hopefully you can do it. What did it come out to? Oh, pretty evenly split. I got to tell you, given the time frame that we have, that this is final coming up in 2021, you're going to have a few years to take a look at your policies and procedures, and perhaps your methodology, your software of how you put together your financial statements. Certainly Ide Bailey can help you through that. And certainly there are some opportunities for you to do things like advanced data analytics. If you happen to have component units, use software such as Salesforce to communicate with your component units, various filings and form fill outs. A lot of governments are moving towards Salesforce to do that, and we can help you through stuff like that. Certainly things like Workiva and so on are becoming very popular with governments as to financial reporting tools, and certainly going on the cloud, so to speak, as tools. And so all of those may change as part of the financial reporting process. And so it gives you an opportunity to take a look and say, okay, this is where the GASB's headed. I need to change too. So with that, hang on. We do have some time for Q&A. A lot of them was copies of slides and so on. Copies of slides, they'll be sent out to you. If you don't have it as part of the PDF, certainly I think it'll be coming soon, with the release of the Zoom information. It should be coming to you from actually Zoom. So who knows, it might be set up in your spam. Any other questions out there, Nanette?
Eric, I saw one that came in earlier, and it had to do with the SBITAs, which I think is subscription-based information technology arrangements, just a little bit more about that. So I don't know if you want to address that at that time, or maybe reach out individually.
Yeah, certainly I can reach out to you individually. Somebody also commented on COVID-19 and so on, but and look, I'm not a doctor. I play one on TV, but apparently, a bunch of the doctors who are on TV live within a couple of blocks of where I'm sitting, and could somebody say unusual or infrequent? Sure. Could be. A lot of that is up to professional judgment, but in the example, they used a flood. Now, for those of us dealing with climate change, I mean, look, a tropical storm just came through over the last 24 hours where I'm sitting, and certainly could be unusual or infrequent, called climate change. Could COVID-19 be considered unusual or infrequent? The GASB put it into their technical bulletin that it is not. And I'm just reading to you what it says in the GASB technical bulletin that was released right prior to June 30. You may have differing point of views, but we're not talking politics here. We're not talking economics. We're talking what the GASB put out. In terms of subscription-based information technology arrangements, we're going to be talking about that in future webinars. That is the topic of GASB 96. And speaking of future webinars, I just want to let you know, our next two webinars are on GASB 87 on September 16th. Mark your calendars. We're going to be talking about lessons learned from an implementation. Yes, folks, there are governments out there that are implementing GASB 87, and they're actually doing it. We'll talk to you about lessons learned from an implementation from a lessee's point of view on September 16th. And then on November 18th, we're going to take it from a lessor's point of view. We're also going to talk about GASB 94 on public-private partnerships and GASB 96 on subscription-based information technology arrangements. Embedded within that November 18th webinar. Both of those are going to be 2 CPEs as well. Now, let's see, we had one final question. Did I hear me say that we'll be sending the slides? It would be helpful to be able to print full-size slides and to see some of the sample statements. Now, we do send out PDFs, and I'm not sure if they're 3 a page or 2 a page or full-page slides. What do you think?
They were 3 a page this time with notes.
Okay.
But Eric, if you think we should resend something, that's possibly something we could do.
Nah, I got a better idea for you.
Okay.
I got a better idea.
Okay.
If you go on the GASB's website, www.gasb, G as in girl, A as in Alfred, S as in Steve, B as in boy, .org. And one of the first entries will be the financial reporting model exposure draft. It'll be on the left-hand side here. Let me just go on the GASB's web page just to make sure it's still there and they're up, because the tropical storm is going through there right now. Yeah, it came out on July 24th of 2020. GASB requests input on proposals to improve key components of government financial reports. The exposure draft is right there. The exposure draft is available. It is available to you. You can easily see it online. And I actually just pulled it right up. So it's freely available to you. All right, anything else, folks? We have about 30 seconds left. I'm on the GASB's website. Where is it? Okay, look under latest news. It is the second entry down under latest news, and I'm on there as well, right below the Financial Accounting Foundation Board of Trustees meeting. You don't need to read the notice of that meeting, but it's right below there. Other elements. Well, hearing none. All right, I want everybody to have a healthy and happy and safe rest of your summer. And we're looking forward to hearing from you if you have any comments, questions, and answers. Looking forward to having you participate on September 16th. Thank you again.
All right. Thank you, Eric, for spending the last 2 hours with us. We really appreciate it. And thank you, everyone, for attending. If you do have questions, please reach out to our Eide Bailly staff. They'd be happy to help. Everyone, take care and stay safe. Thank you, everyone.